Good morning everyone, and thank you for joining us today on our webinar for long service leave. My name is Angela Lehmann and I am the Legislative Manager for ADP. We expect that today this webinar should run for approximately 30 to 40 minutes. Due to the complexity of this topic and the sheer volume of attendees we have here today, we will unfortunately not be able to take any questions. We will, however, provide you some information on to where you can get further advice at the end of the webinar. Today's webinar, we have muted all attendees and it will be recorded, and we will ensure that you receive a link to the recording in the near future. All we can provide today is a high-level summary, and this is not intended to be advice. So that said, without further ado, welcome David. We have David Bates, the Managing Director of Workforce Guardian, with us.
Hi Angela, how are you going?
Great, David. What an exciting session we've got lined up today.
Yeah, plenty of information over the next half an hour, not just around long service leave itself, but actually around the tax implications too. So I think it'll be really useful for attendees to be able to put those two things together.
Exactly, exactly. So as David said, I'll add my 5 cents on the tax implications a little later on. So David, what I'll do is I'll hand it over to you. Maybe you can kick us off.
Thanks very much, Angela. So for those of you who aren't familiar, the organisation that I'm from is Workforce Guardian, and we work in proud partnership with ADP. As Managing Director for Workforce Guardian, I work very closely with Angela and the whole team here at ADP, and together we're able to provide you with effectively a one-stop shop for everything to do with HR as well as payroll. So it's a nice little partnership, seems to work very well. All right, so here's a little overview of what we're going to be covering off during the webinar today. We're going to start off by discussing how long service leave fits in with what are called the 10 National Employment Standards, or NES for short. So if any of you aren't familiar with that linkage, we'll cover that off first. We'll then talk about the applicable legislation here in Victoria. Where does long service leave legislation, where is it sourced from here in Victoria? And then we'll go on to look, if you like, a little bit in more detail about these long service leave entitlements themselves. And specifically what we're going to talk about are what are the actual leave entitlements and how much do employees get paid when they take long service leave here in Victoria. We'll then talk about pro-rata long service leave, something that we get asked about quite a lot, I have to say. Then we'll talk about how long service leave is actually taken, so the process that needs to be followed. And then we'll talk about some other rules that also apply to long service leave. And really what we're going to pick up there is some of the common questions that we receive about long service leave, such as, can I cash in long service leave? So we'll cover that off as well. Again, probably one of the most popular questions that we receive. So we'll give you a definitive answer on that one too. Then I'm going to hand back to Angela to talk through the tax implications of long service leave in Victoria. What do you need to know from an employment perspective when it comes to tax considerations around this particular form of leave? And because we like to give you useful resources, we're going to leave you with a list of places that you can go for further information. And of course, at the end, I'll also just explain how you can access further services from ADP or Workforce Guardian if you'd like to do so. All right, so without further ado, let's get stuck into the webinar proper. And the first thing that I just want to emphasise is that long service leave, since the 1st of January 2010, has been one of the Commonwealth Government's 10 National Employment Standards. Now these NES for short come from the Fair Work Act of 2009, and again, they took effect back on the 1st of January 2010. Now, many employers still mistakenly think that long service leave remains just a Victorian government entitlement, if you like, but it is important to note that it is specifically referenced in the 10 NES. However, the intention was to create one national long service leave entitlement. Now that sounds like a bit of a utopia to me. It would have been fantastic to have one national long service leave entitlement, but because we like to do things in a little bit of a complicated way here in Australia through our federation, what happened unfortunately was the Commonwealth Government was never able to get around effectively to producing one national long service leave entitlement for all Australian workers. So instead what we have is a reference to long service leave in the 10 National Employment Standards. But in effect, we then still have to go back, for now at least, to the old state or territory-based laws. So although we do have this reference to it in the 10 National Employment Standards, it is the Victorian legislation which for most Australian employees, or certainly employees here in Victoria, that will continue to apply. So just on that, let's look at the specific piece of legislation that we have here. Here in Victoria, most people are covered by the Victorian Long Service Leave Act of 1992. Now, if you're not 100% sure whether the employees in your business are in fact covered by this act, then whatever you do, don't just assume that they are. There are still quite a number of tricky rules and regulations, some old awards and some other enterprise agreements too, for that matter, which might impact upon coverage of the Long Service Leave Act to your employees. So again, if you're not 100% sure whether or not your employees are specifically covered by the Long Service Leave Act of 1992, make sure you get some expert advice. Don't just rely on that piece of legislation, because if it doesn't apply to your employees, there's a really good chance that you might accidentally end up providing incorrect entitlements.
Yeah, and I think that's the message that we like to enforce too with all our clients as well. It's not necessarily a blanket approach.
Exactly right, and it's always better to be safe than sorry and get advice up front rather than wait until someone has already requested it. So the last thing to note, of course, as well, is that there are heavy penalties which do apply to employers who do not meet their long service leave requirements. So again, absolutely critical that you do make sure that you know what the entitlements are and the source of that legislation. All right, so in terms of the current entitlement to long service leave, let's have a look at that here in Victoria. So at the moment, 8.66 weeks of long service leave is what employees are entitled to receive after they've completed 10 years of what we call continuous service. Now, if an employee was to last more than 10 years, and unfortunately, let's be clear, many employees don't last more than 10 years in their position. Most employees chop and change employment now. But if an employee does make it to 10 years, that's when they become entitled to 8.66 weeks. If the employee stays on after that, they then become entitled to 13 weeks after they've completed 15 years of service. And what we then find is that there is an extra 4.333 weeks after each subsequent 5 years. So you can see that long service leave is indeed an entitlement that's continuing to accrue, and it doesn't just stop at the 10-year mark. There are further entitlements that come along after 10 years. But the key thing to note just at this point is that until an employee has completed 10 years of service, they have no entitlement to take long service leave. So they do have to complete that first 10 years before they get access to that 8.66 weeks of long service leave. Now, one other point that I really want to emphasise here, Angela, is that casuals do accrue long service leave, and it's a common misconception, certainly something which goes back, quite a long way here in Australia. For some employers, it's still a misconception that casuals do not accrue long service leave, but in fact they do.
Yep, we do see that, David. We get a lot of clients asking about that, and even in my experience in previous roles, it's definitely something that does seem to be a point of contention, really. Yeah,
because most employers, I suppose, quite logically assume that because the employee is a casual and therefore coming and going fairly regularly, that they can't build up that period of service. But in fact, they do. And what we'll see in just a second is, I suppose, that what we call breaks in continuity of service. So we see how that works in practice. But for now, just worth definitely noting that if an employee doesn't that a casual does accrue long service leave and that they continue to accrue it right throughout their period of employment, subject to the rules we're about to go through. All right, so what is continuous service and what breaks continuous service? Well, as the name would suggest, continuous service is exactly that, service which is continuous with the same employer over a period of time. Now, when we say continuous service with the same employer, it's worth noting that if the business changes hands, that generally will not break continuity of service because the person will continue in effect from one employer to the other. So we know as well that this period of continuous service is not broken by any of the following three situations. Firstly, if the employee takes a period of approved leave, that will not break any form of continuity of service. So if someone goes on unpaid study leave for 3 months, that won't break their period of service. Similarly, if an employee is dismissed and then re-employed by the employer within 3 months, then that also will not break continuity of service. And lastly, if the employer lets an employee go due to lack of work and subsequent employment, that also will not break continuity of service. So what that means is effectively that if the employer makes an employee genuinely redundant, then if they then re-employ that person, effectively without any limit on how far down the track it is, then that person's continuity of service is not broken. So 3 specific situations where continuity of service is not affected by someone leaving or being absent from the workplace. So now that we know what doesn't break continuity of service, let's talk about what doesn't count towards service. And it's really important to make this distinction between what is service and what breaks service. So the following periods do not count towards the accumulation of service for the purposes of calculating long service leave. Unpaid parental leave. So if an employee goes off and takes, say, 12 months, the standard rate of of unpaid parental leave, or indeed if they then extend it, as they can, again under the national employment standards, up to the maximum 2-year period, then in those circumstances, there's a situation, because if they're gone on unpaid parental leave, that unpaid parental leave period, although it doesn't break service, it doesn't count towards service. And that's quite important to note, because that will, especially if the employee's gone for say 12 or 24 months, you can imagine that an employer might think that the employee has become entitled to long service leave 1 or even 2 years earlier. So that's all good. So very important to keep that in mind, that unpaid parental leave won't count towards service. Secondly, any periods between employment with the employer will also not count towards service. So let's say if we go back to that previous example where the employee is let go due to what we call slackness of trade, which in more modern parlance we'd call a genuine redundancy, then what we know is that during that time when the employee is away, that does not count towards their accumulation of continuous service. I should have had another coffee. Andrew. Difficulty saying continuity of service. There we go, got it. All right, so they're really important points to note.
Yeah, and I'm really glad you covered off on that, because it is a common mistake we see. They overlook that when they're calculating the entitlement.
And so they think that an employee's become entitled to access long service leave maybe 1 or even 2 years earlier than they should have.
Exactly.
Okay. All right, and so one other point that I'd just like to note, I guess, at this point, is that long service leave does continue to accrue during the first 48 weeks that a worker spends on workers' compensation here in Victoria. So we do have a specific entitlement in the Victorian legislation that allows an employee to continue accruing long service leave. In other words, their period of time on workers' comp counts towards continuous service during the first 48 weeks that they're on workers' comp. After that time, it cuts off effectively. So just also keep that in mind. That question about whether time spent on workers' comp counts towards service is one, again, that we get all the time. So it's very important that everyone's clear about that too. Okay, so you've been in the business for 10 years, you've finally managed to get to leave, you finally get to take your long service leave, or you have an employee who's about to take it. The logical question, how much do you pay them? Well, here in Victoria, employees must be paid their, quote, ordinary rate of pay when they take long service leave. And the ordinary rate of pay is exactly that. It's generally the amount the employee receives, excluding any penalties, overtime, shift allowances, these sorts of additional amounts that might be paid when an employee actually performs work. So we take those amounts out, and what we have are the ordinary rates of pay. Now, the way that you get to the ordinary rate of pay is you take the total number of weeks of employment, divide by 60, and then multiply by the ordinary rate at the time the leave is taken. Now, what's critical is that we do take into account the pay rate at the time the leave is taken, because quite often an employee's wage, well, we hope over 10 years an employee's wage might have risen once or twice over 10 years. Certainly if they're on the national minimum wage or an award rate, it's going to have risen probably 10 times during that period. But it's the time when they take the leave, it's the wage rate right there that we take into account, and that it is payable during the period of long service leave. Now, another really common question we get is, what happens if the weekly hours of work fluctuate? So, for example, if we have someone who's part-time and then becomes full-time, goes back to part-time, etc., how do we then figure out how much they have to be paid when they take long service leave? Well, we actually have a handy little reference here in Victoria, because if the weekly hours fluctuate, what we do is use the higher of the average number of weekly hours over either the previous 12 months that is the 12 months immediately before the long service leave is taken, or over the previous 5 years before long service leave is taken. So we'd have to do a calculation there. Whichever of those two is the higher figure, we apply for the purposes of this calculation to work out the pay.
Yeah, and I guess what's really important about this, putting my accountant hat back on for a moment, is it means that your provision is never really 100% accurate, because it has to be basically at the time that the leave is taken that you'll actually know the appropriate rate at which you need to apply. So it means your provisions are never quite 100% accurate, but obviously it is enough to forecast what you potentially will spend.
Exactly right. And as a corollary to that, what's really important again is that if an employer decides to give an employee a pay rise, if they've got somewhere, and they should have somewhere, an accrual for that person's long service leave, then what they do need to do is go back and look at that accrual and then rework out the dollar value of that accrual. Because, you know, if you give someone a pay rise, the amount or the liability that's sitting on that accrual suddenly increases because the value of it increases. So really important to also double check that. All right. Now, pro-rata long service leave. This is a question everyone loves to ask, because although we've talked about the fact you actually need to complete 10 years of continuous service before you can take long service leave, we do have an entitlement here in Victoria to access what we call pro-rata long service leave. Now, very importantly, this isn't talking about taking long service leave. This is about being paid out your pro-rata long service leave. And what the Act here in Victoria says is that if you've lasted in your position for at least 7 years, but less than 10 years, then you have a right to receive a pro-rata payout of that accumulated or accrued long service leave. And the way that we work that out is pro-rata long service leave is effectively 1 week of long service leave for every 60 weeks of continuous employment. But remember, this payout is only required if an employee's employment comes to an end once they have completed at least 7 years of service and before 10 years of service. Now, at 10 years, there's no question about pro-rata long service leave, because an employee becomes guaranteed to receive their payout of long service leave once they've hit that mark, whether their employment continues or not. But we do have that little, if you like, safety net. If you make it to 7 years, then you have an entitlement to receive a payout of your long service leave. So you're actually getting around now to taking long service leave, or you have an employee that's going to take long service leave. How do they actually go about doing that? Well, the first thing to note is that long service leave under the Victorian legislation should generally be taken in one continuous period unless the employer and the employee agree otherwise. So if they come up to their own arrangements, that's okay, subject to the rules that you can see there on your screen, points 2 and 3. So the first 13 weeks of long service leave can be taken in up to 3 separate periods, and then any subsequent long service leave can be taken in 2 separate periods. So we do have a breakdown, if you like, of how long service leave should be taken. Otherwise, it's in one continuous period. Now,
the most important one, David.
Yeah, another question that we get asked all the time, can I just cash out some of my employees' long service leave? In other words, the employee is still working in the business. They may or may not have reached 7 years of service, but they just like to receive their long service leave in a cash payment. Very common scenario. Well, here's the bad news. Under the Victorian legislation, it is absolutely not allowed to cash out, sometimes also called cashing in, long service leave. And in fact, doing so here in Victoria can even result in a criminal conviction. So under no circumstances should anyone covered by the Victorian Long Service Leave Act ever agree to cash in or cash out long service leave. Now, the only exception that sometimes applies again, and this goes right back to the beginning of the webinar when we talked about enterprise agreements or other instruments, if there is another instrument that is a lawful instrument, not just a written agreement between the employer and an individual employee, that won't work, but an actual statutory instrument that allows it, then that's fine, go ahead and do it. But by and large, 99% of the time in Victoria, it's not possible to cash out long service leave. Another point to note here is that an employee must not work while they're on long service leave. So keeping in mind the whole point of long service leave is effectively to provide people with an opportunity to recharge, take some time off and relax. Although I think if we look, and this is a little fascinating fun fact, I think the history of long service leave is that it came about because employees in Australia and in New Zealand, after being in their jobs for 10 years, wanted to go back and visit their families in Europe. And of course we had to sail back. So we needed 3 months to sail there and see the family and come back. So, you know, I think that's where it all came about, but still this entitlement is there. But of course, if that was the purpose of long service leave, it was never intended to be a period of leave that you could then go off and get other employment on. You were meant to be using it to relax. So here in Victoria, the legislation still reflects that historical precedent, if you like, and employees must not work while they're on long service leave. And one last rule to mention, employees under the Victorian legislation can be directed to take long service leave, and of course this is only after they've completed 10 years of service. They can be directed to take their long service leave, but the employer would have to give them a minimum of 3 months notice. Yep. So maybe to book the ship tickets to get back to England, I don't know. But 3 months notice is absolutely mandatory. Now that ends the, if you like, statutory obligations under the Victorian legislation and under the national employment standards. Angela, I'll hand it back over to you now to talk about the tax considerations. Or as David likes to call it, the boring bit. But that's okay, that's okay. Professional differences there. Thankfully, the one piece of good news is tax considerations are at a federal level, so regardless of where you employ, these same rules will apply across the board. So that is one piece of good news with the tax considerations. Obviously there are some quirks, as there always is with any ATO or tax rules, but we will hopefully try and explain those to you now. So I was going to address first and foremost long service leave when it is paid to a continuing employee. So as you would be aware, when you are processing a payroll and you're calculating withholding tax, you would use either a weekly, fortnightly or monthly tax table depending on the payment frequency of your payroll. So you will use that exact same tax table again, where you are actually paying the employee long service leave for a period of greater than one pay period. So if you're monthly, you're paying for a number of months, so across more than one pay period. You would still use those tax tables, but you would have to work it out as an advanced number. So as you can see with the formula on the screen, if it's the weekly, fortnightly or monthly withholding amount times by the period of leave. So as I said before, if it's 3 months leave, you work out what the monthly withholding rate is and times it by 3. I need to note at this stage that if you are paying long service leave to an employee taking long service leave, that actually does count as ordinary times earnings. So there will be a super guarantee payable on that amount of long service leave. So that's the easy one. That actually is a question we get asked all the time too. Even though Workforce Guardian can't assist with superannuation and OTE, yes, one of the questions we always get asked is whether or not it does count as ordinary time earnings. So that's really helpful. Yeah, and I think as we'll see now, it's, as I said, there's always quirks with tax law. Yeah. So we'll see, because it depends on whether we are taking it as leave or as part of termination. So yeah, very important. So you're not boring at all, Angela? Oh, not at all. I love this stuff. So termination of employment. So this is where everything becomes a little different. We still need to work out a withholding amount, obviously, but the rules are different. So we need to refer to ATO Schedule 7. It's called the tax table for unused leave on termination. So it actually covers a number of leave types, but long service leave is definitely one of the leave types. It's quite a good document and it's quite a good reference. It actually has a table which splits the withholding rates between a normal termination, so voluntary resignations, employment terminated due to inefficiencies or retirement, and then it splits, the other half is for genuine redundancies, invalidity or early retirement schemes. So it's great. It actually does split between the two types, first and foremost. And then what it does, it references the withholding rate to the accrual date, so the date that the employee had actually earned or accrued the leave. So the important dates in this table is the pre-August 1978 component, the August 1978 to August 1993 component, and the post-August 1993 component. Wow. I know, I know. But it then goes one step further, and it actually even gives you where each of those components should be disclosed on a payment summary. So at least they're trying to make it as easy as possible. Yes, it is. So the one note I've got at the bottom of the slide there is
the exception to this rule is where you're paying long service leave or unused long service leave, I should say, to a deceased employee or a deceased employee's estate, you do not have to withhold tax. So this doesn't apply, Schedule 7 doesn't apply, and no withholding applies if it is to a deceased estate. So we were talking about quirks with ordinary times earning, or OTE as it's known. In this situation where long service leave is paid on termination of an employee, it is actually specifically excluded from the definition of OTE.
Okay.
So no superannuation guarantee
Got it.
payable. Yeah. So it is a bit of a quirk, federal law, but still a little bit tricky, unfortunately. The very last scenario, and this would not be common, but I thought for good measure would cover it off, is if you back pay long service leave, then you would refer to Schedule 5. Now, really, the only time we'd probably see this is if you actually made an error when you first paid the long service leave and you realise you underpaid and you have to go back and make another payment, or if somehow it was completely overlooked from the payroll, which, you know, again, the circumstances are probably quite limited, you would refer to the tax table for unused back payments. So I think the first thing I'll mention is there is a cap. So there's a withholding cap on this of 49% tax when you're using the annualising method. And also that cap will be influenced if you are paying the long service leave to an employee that has either a HECS, HELP, trade support or financial supplement loan. So please just be aware of who you're paying it to and how that might influence the overall withholding on the payment. This schedule, it's quite detailed also. As a matter of fact, probably has more detail than the Schedule 7 because it gives you a variety of methods to use to work out the withholding calculation. So there's Method A and Method B. Method A is suitable for back payments regardless of the financial year that the applicable payment relates to. So there's that option. And then Method B has two parts. It has a Part 1 and a Part 2. And so you can have a look at that and see which one sort of suits the scenario better. Part 1 is applied to specific periods in the current financial year, whereas Part 2 doesn't have that sort of stipulation.
Okay.
Yeah, so confusing, but it is actually well laid out in the schedule.
No more confusing than employment law, so you know.
Yeah, exactly. Exactly. So the schedule itself has a step-by-step calculation chart, believe it or not, which is brilliant. So if you are getting a little confused in the reading, the chart should help you work through the calculation. So that's as much as I want to say about the tax considerations before I confuse everyone entirely. We have put together a slide with some useful resources. David's been nice enough to give you the Business Victoria comprehensive guide site there, and I've also attached for you both Schedule 7 and Schedule 5 if you want to refer to them yourselves at any point in time.
Well, the key takeaway here is, wouldn't it be great if our federal government and our state governments all spoke to each other and agreed on things that were consistent, because that would make life a lot easier for employers out there.
Absolutely.
All right. So at the moment they're all bouncing around in between, you know, tax schedules, and then they're dealing with different definitions of long service leave across states, etc.
Yes.
But hopefully the information that we've provided, certainly through those links, will go a long way towards at least leading employers to where they can get correct information.
Absolutely, absolutely.
Perfect.
And speaking of getting correct information, David, as we said at the beginning of the session, we would try and give you some help of where to go.
Absolutely, yeah. Look, at the end of the day, you've got to find somewhere where you can get clear, definitive and practical advice. That's what it's all about. So, look, if this webinar hasn't already convinced you of the need to be able to access that kind of information, we've got some good news for you. Firstly, if you are already an ADP client, then you have access to the dedicated ADP Workplace Advice Line, which is actually operated by us here at Workforce Guardian from ADP. So existing ADP clients can phone through on 1300 443-088 with any of their long service leave related questions.
Just no tax questions, please.
Yeah, yeah, we can't assist you, as you've already discovered during this webinar. We don't assist with tax, superannuation or salary sacrifice via that service, but in terms of actual long service leave entitlements, when people can take it, etc., if you're an ADP client, that service is there for you now. And if you're not already an ADP client, well, now would be a great time to find out more about ADP services, because through ADP, you can of course access all of ADP's world of payroll solutions, and then with the partnership with Workforce Guardian, access our HR support and advice. So if you'd like to find out more about ADP and the services that they offer, contact the team at ADP. They'd love to hear from you. 1-800-000-729.
Thantake you, David. Thank you for being here and co-hosting.
My pleasure. I wish you'd put on nicer weather for me here in Melbourne, but that's okay. I'll take it.
We really hope that everyone who has tuned in has gotten a bit more knowledge and armed with some tools that they can use when dealing with long service leave. So thank you for joining us, everyone, and you'll be receiving your recording shortly.
Thanks a lot, everyone. Have a great day.